Mr. Camacho.
Lito Camacho from Credit Suisse.
Okay. Yeah, sorry.
Yes. Madam Ho Ching, you very clearly explained and described the transformation or transition from your earlier portfolio mix with regards to geography and regions and to where you want that headed. I recall in many Temasek presentations also about a sectoral cut of your portfolio. And I recall many conversations that I've had the opportunity to have with you where you articulated the role of the financial sector as a proxy to many of the economies that you would want to be invested. Of course, in the last many years, you've made some very good investments, some not so good investments, and very recently you've made the investments in the financial sector. Just wondering if you might be able to help or share with us the future direction of your sectoral mix within the Temasek portfolio.
Okay. Could I piggyback on that and ask you a similar but different question, which is I remember before the global downturn, the world was very obsessed with food security and energy security. So my question, like that of Lito, is whether is Temasek investing any of its funds in these two areas, in food and in energy?
We have got 4 investment themes. First, we are looking for proxies for the economy. The financial services, particularly in the emerging economies, are a proxy because you really don't have an index that you can sort of invest comfortably. Infrastructure, transport and logistics, these are also the other 2 proxies for the economy in general. So we are interested in that. We are also very interested in proxies for the middle class. This is where we look for opportunities to invest in particularly in what we call the emerging middle class. This is where we go into microfinance. We support microfinance opportunities. It can be healthcare, education, food, and so on. The third area that we are looking at, the third investment theme we are looking at, are areas where there are comparative advantages. So in India, we look for BPO investments, investments where there's IP content. In China, we look for investments which are linked to the rapid rate of urbanization as well as the manufacturing capabilities. And in the last area, we look for companies particularly at an inflection point as they look for transformation opportunities. We like to participate in that. In terms of sector-specific, we are actually agnostic. We don't have a target. I would say in 2004, in our sort of broad categorization of where we want to be, we thought we should be 10% in energy, mostly because we also have a portfolio that is exposed to energy, transport, and things like that. At the time, we thought we had 7% exposure to energy in the form of our power gencos. And as we look at the market, we wanted to have additional exposure, and the prices just ran away from us. On hindsight, looking back, we have wrongly identified our gencos as part of the energy sector because in the Singapore context, the gencos have a pass-through, and therefore we were not taking any exposure to energy at all in terms of pricing. It was simply an infrastructure. But looking ahead, I think we are quite comfortable to look at opportunities in the food sector, in the energy sector, or in any other sector which are part of these 4 themes.